Welcome back to the channel. My name is Steven. I'm a pharmacist. I own 52 units of real estate and I help coach people to buy their first multifamily deal. So today I want to talk about financial freedom and, my net worth. So, if you listen to a lot of podcasts like Bigger Pockets Money, Mr. Money Mustache, they talk about living off the 4% rule. So how the 4% rule is, you take up all your assets. So for me, that'd be about, $6 million, and you times that by 4%, which is going to be about close to $240,000 a year, and live off that for the rest of your life. So for me, if I had $240,000 in stock growth, real estate growth, and I can live off that, right? That's basically my almost salary right now, or two pharmacist salaries right there of 240K, right? So if I live off 240K divided by 12, that's about 20K a month pre-tax. So after tax, it might be like, I don't know, let's just call it 14K or 12 or 13, 14K. And I can, and assuming I have a paid off house, like that's actually a very comfortable lifestyle, right? But the problem and how it affects me is that most of my net worth is not very liquid, right? So like this 4% rule more applies if I have like an index fund portfolio. Like if all my $6 million was, let's just say I sold all my real estate, I dumped it all into the S&P or the total US stock market through Vanguard, and have my 3 index fund portfolio. So it's 75% in total US stock market, it's 25% in international, and 5% in bonds. And basically all my 6 million would be in that, and I would live off, assuming 7% growth a year on average, I'd live off 4% of that. So I don't even touch my nest egg and live off that 4%. So numbers wise, it does make sense, right? Like obviously if I sold all my real estate, let's just say it's worth, 6 million net worth. After I pay taxes, maybe I have $5 million net, right? Just for easy math, 4% off that would be about $200,000. And I can live off that too, right? Especially with a paid off house. But the problem that I'm running into is, okay, so my net worth is like 5 million out of the 6 million is in real estate. So it's trapped in equity, right? So I have like one single family home, 800,000, one single family home of like $1 million. My apartments have like high equity in them, right? So for me, the cash flow is, good. I get about $8,000 a month on average through cash flow, but realistically, it's just most of it is being saved for like, I need a new roof. Maybe there's HVAC, maybe there's plumbing, maybe there's bed bugs, right? It's just money for like a rainy day, and money for, just an emergency, right? So I don't feel comfortable living off of it. Like I would probably feel comfortable living off maybe 2,000 of it a month, and then anything above that, it's a cherry on top. So that's the only downside of multifamily real estate is your expenses are a little bit more variable compared to single family home, especially if you get like kind of turnkey single family homes with not much repairs and maintenance. So so to me, I would comfortably say I'd have $2,000 a month in cash flow, but for me, like if I really want to like retire and live off that 4% rule, I have to sell a lot of my assets. So I would sell my first single family home, which has $800,000 of equity, to pay off my primary residence, to wipe off my $5,500 a month mortgage. So I lowered my expense significantly. And then that property just breaks even in cash flow. So I would still cash out $8,000 a month despite selling that one. That lowered my expense to basically $2,000 a month. And with $8,000 a month in net cash flow, I can live off 25% of that, which is $2,000. So basically my real estate portfolio would cover my living situation, assuming a paid off mortgage, right? So that'd be okay. But if I wanted to live off that 4%, like you said, like with real estate, you only make the money when you sell, right? So, but when you sell, you pay capital gains tax and you get the depreciation recapture. But you can liquidate it, sell it. If you live in it as a primary, you could, defer up to $500,000 in capital gains if you're married, or $250,000 if you're single. And then you can take that money and dump it into like index funds, right? And make it more liquid. So that's kind of the problem that I ran into, or a lot of real estate investors run into, is most of your net worth is like trapped in equity, right? That's asset rich, cash poor, right? So that's the definition of real estate. Unless you build up a portfolio where it's like, I know a lot of people, they own a bunch of single family homes, like maybe 15 single family homes. And, if you could, cash flow $1,000 each on average over time on those, then, you'd have 15K in cash flow. And then your expenses are a lot more manageable, and your expenses are, more reasonable, after factoring in like CapEx and reserves and all that. So that's something that I've been really thinking about. Like, okay, like there might be a phase where I'm just selling a bunch to pay off debt, right? And then once debt's paid off, then I can go buy more real estate, because once debt's paid off, cash flow increases, for example, right? And then once cash flow increases, you save more money. You can go buy more real estate. So that's essentially what, like, Dave Ramsey does. He buys all his real estate cash, and he does have a $1 billion media company that he makes a lot of money from, and he uses that money to basically buy, real estate cash. So he does have a money generating machine that's supporting it to allow that. So he doesn't need to leverage. But I do see the point, right? We're like, hey, if you own it free and clear, and let that compound over time, then you're good. So like, kind of this example is like, what I heard is like, you kind of want your foundational real estate pieces. So your foundational real estate pieces would be like, okay, you're paid off primary residence. You don't have to worry about your living expenses ever again, or it's very minimized, right? Just property tax, insurance, HOA, utilities, very minimized, low stress, right? And then like my 26 unit is my cash cow, right? Like that property, it's generating income. It's grossing 16K a month. Let's say your expenses, 8,000 or a little bit less. Let's say 7,000. I have $9,000 in NOI minus your $2,000 debt service. So I have $7,000 a month in cash flow. So this one is my cash cow. My 20 unit, it probably depends on the month, but like it averages maybe about $1,000 a month. So it doesn't cash flow as much. My Alabama property cash flow is about $600 a month. I have a single family home, which is negative cash flow, because I stripped out a lot of equity from that. And I have another single family home that breaks even, another one that makes maybe a little bit of money on that one. So now, like, I could look to be like, okay, maybe I can sell this like negative cash flow real estate, a lot of equity in there, 1031 exchange that into a bigger asset, right? Like an apartment complex, for example. Or I just can keep it, right? And eventually, it will be paid off, and all that good stuff. So, for me, like, you want to keep your foundational pieces of real estate. So for me, that would be a paid off primary. So I'd give up a house that's, cash flow negative or breaking even. So that take off the negative cash off the table. Unfortunately, I'm renting out my negative cash flow house to, family. So I can't sell that one. But it's okay. It's the risk that I took when I stripped out equity. But there's one that's breaking even. I could sell that, pay that off, and then keep my 26 unit apartment, right? So if I got sick of my 20 unit apartment because maybe it's not performing, I could sell that and use that to pay off my 26 unit if I wanted to, right? And then that would own that 26 unit free and clear. So now I have my two foundational properties: a paid off primary and then a paid off 26 unit apartment complex. I'd probably, and then I could, sell that negative cash flow real estate, or the one that breaks even, 1031 exchange that into another property that makes more cash flow, right? So you have to constantly reallocate your real estate and not be too attached, right? But for me, it's hard because I locked in low interest rates during COVID, 2.75% interest rates, 3.125% interest rates. So it's hard for me to like move on from these properties. But obviously it'd be a lot easier if interest rates were like 5%. So it's not too big of a gap. But that's just something I've been thinking about. Like, I want to build my foundational pieces. So let's just say I have a paid off 26 unit. I have a paid off primary residence. My 26 unit would be cash flowing, let's just say like $8,000 to $9,000 a month. And from there, let's just say that, I'm able to save that money to go buy more real estate, right? I'm trimming the properties that don't do well, and then I'm trading up my properties that get more and more cash flow. Right. So once I'm stabilized, I can then scale again, right? Where I could, buy another apartment with 10% down or 20% down or 25% down, a little bit more leveraged. So these are like the different phases of real estate, right? You scale. After you're done scaling, you'll stabilize and maybe prune and take some debt off the table, right? And then after you have your foundational pieces, which I define as paid off house and maybe your paid off cash cow apartment complex, and then from there, you could sell another asset with high equity that's, breaking even or negative cash flow, and 1031 exchange that into a cash flowing asset. So now you have another, cash cow. And you slowly stack these over time, right? So that's it. Real estate, it's a long-term game. Like, you want to hold the assets as long as possible. And in order to not lose your real estate, you want to minimize and control your debt too, right? So like, I might be at a point where I'm like 40% debt versus 60% equity, or maybe 30% debt versus 70% equity. And then at that point, I can buy another asset where I'm leveraging up again, and then maybe my overall debt is about 50%, right? So it's really architecting your portfolio to fit your lifestyle and to give protection. So for me, I'm kind of more playing defense right now, which is why I'm not as motivated to buy. And it's just a season of buying real estate. And lucky for me, interest rates are not that great. I mean, they are trending down. Like, I was surprised to see 6% interest rate on multifamily and like a little bit sub 5. Hoping it goes down a little bit closer to like low 5s. That would be amazing if that happened. And then from there, it's really just repeating that process, right? Where I scale, I buy more, and then do I want to prune some properties and then move on from them, right? So that's kind of my path and how I need to take some chips off the table, because like I said, or I might get to the point where I'm completely sick of owning real estate. Let's just say like in 10 years, 15 years, I'm done with real estate. Don't want to do it anymore. Made enough money from it. I still want to pay off primary. I'd probably still keep my paid off 26 unit apartment complex. Don't have to worry about balloon payments. I can literally sell everything else and then pay the taxes on it, pay depreciation recapture, and dump that into index funds. And then I'm good for the rest of my life, right? I can live off the income from my paid off 26 unit, which more than covers my primary residence. And now I have like $4 million in index funds. And let's say I'm living off that 4% rule. That's about $160K of income on top of that. So I'm getting cash flow from, let's say, $8,000 a month from my 26 unit, plus I can live off 160K a year pre-tax on top of that. Like, that's a pretty good life, right? I could travel and do whatever I want. So that's what I'm saying. I'm not trying to I have something to lose now, right? Before, when I was scaling in the beginning, I had nothing to lose. Like, I remember thinking to myself, dude, if I buy this house and I lose everything, I'm just starting back at zero and still making like 6 figures as a pharmacist. I just work longer, right? But now that I built up $6 million net worth, I'm like, I have something to lose now, and I don't want to lose it. So these are the moves that you would make to make sure you don't lose it, right? You have to lower your debt and then really architect your portfolio and trim your portfolio, right? And take some chips off the table potentially. So, for me, like I said, if I ever made it big on my business, my coaching, my YouTube blows up, and I made like $1 million, I just pay off this house, and then whatever money after that is just luck and cherry on top, right? So that's kind of my goal and my objective of that. So I'm in the season playing defense because I have something to lose now. So anyways, if you want to get multifamily coaching 101 and want to join a mentorship, hit the link down below. Like I said, it just takes one cash cow deal to really set yourself up well. Like, my 26 unit helped set me up well financially for the rest of my life, to change your outlook in terms of retiring early, spending more time with your kids, more family time, traveling more, doing what you want to do on your terms, living life on your terms. Check out the link down below. Otherwise, please comment, subscribe, and let me know what questions you have. Thank you so much, and hope to see you in the next one.